Hi, I'm Jimmy. In this video, we're looking at a great way to know when to sell a stock for buy and hold investors. And the best part about this investment approach is that it allows for us to avoid the noise in a stock much easier than we may think. So for this video, I'm going to use a real stock from a few years back, and I'm going to show you how I use this particular investing method, and then I'll show you some potential changes we can make to it. Now, in the name of full disclosure, this investing approach isn't actually mine. I took it from guys like Warren Buffett or Charlie Munger or Peter Lynch. All I did was took what they were preaching and I put it into Excel and I came up with a good way to follow an investment without being bothered by the noise. Okay, on to our Microsoft example. This is a real example of my analysis of Microsoft back in 2016 for a friend's retirement account. So it was intended to be a long-term investment. And that's really important to this whole investment approach. It really only works if we're intending to hold the stock for at least a couple of years. Now, this is the classic buy and hold Warren Buffett style of investing. Okay, let's get started. So the year is 2016 and the third quarter just ended. And here's what Microsoft's chart looked like at that time. Now, this drop right here, well, this happened because Microsoft came out with earnings and analysts were expecting 64 cents in profit, and in the actual number that was reported was 54 cents. Then we started seeing headlines like this: earnings decline, accounting methods blamed, and profits fall by 25%. And in the month after the earnings were announced, this is what the chart looked like. That's where the earnings were actually reported. And what was interesting about all of the news that was coming out about earnings was that pretty much all the headlines said that earnings were down big, revenues were down to flat, but everything was pretty much a variation of that. But if we dug deeper, well, Microsoft executives were coming right out and saying this is the wrong way of looking at it. In fact, one Microsoft executive said that on a GAAP basis, revenues were down 6%, but when they adjusted for Windows 10 deferrals, they actually grew by 2%. And if you adjusted for the currency, well, it grew by 5%. Now, I bring this up because I think it's important that each of us let our research stand on its own, ignoring mostly outside information. And just because everybody else is screaming that earnings miss or revenue miss or whatever it might be, we don't let that affect our stance as long as we look closely at the actual information. Okay, so this brings us to when we actually buy the stock. So we jump in, we buy 100 shares of Microsoft at about $51 per share. But before we do, we come up with this. This is a table that we create, and here I included 2014 and 2015 for historical reference for the sake of the video, but really what we're after, in my mind, is the projections. Here we threw up the next 5 years of projections, and at that time I just took analyst estimates. And basically what we cared about was analyst estimates for revenue for the next 5 years, and then net income margins I put in there, what they were expected to be. Now, this is important at the time because this is how I was calculating my fair value of the stock. And at the time, I was calculating the fair value to be about $70, $75 a share. But ultimately, I include net income margins and revenue projections because stock prices tend to be highly correlated to both the margins of the company, the profits of the company, and growth of the company. So at this point in 2016, when we buy the stock, the first 3 quarters of 2016 were already completed. Well, as time goes by, another earnings number comes out, and this is what the chart looked like from the day we bought the stock up until the next earnings announcement. So yes, we're up, and it's been a bit volatile, but do we want to sell the stock now? Well, clearly the answer is no. So I'm only going to show 2 more charts from Microsoft stock going forward. Basically, we're going to focus right here, because at the end of the day, this is the most important thing. If we did nothing else but watch this table, I think we would do perfectly fine. So we had our first 3 quarters already filled in, and once we got the new earnings from Microsoft, well, we filled in both the revenue numbers and the margin numbers. And at that point, we can see that revenue missed by about $400 million, and margins came up about 2% short. Well, we're in this for the long haul, so no worries just yet. So time begins to pass, and we spend very little time checking Microsoft's actual stock price. The only exception for that would be is if we're looking to put more money to work, if we're looking to buy additional shares, but let's pretend we're not, so we barely have to worry about what Microsoft's stock is actually doing. Now, in practice, I actually check the news and the stock price about once a week, just so I can stay informed with the company. So if the company has a big move, well, it's likely to be tied to news, and that allows for me to challenge my investment thesis. Which, by the way, at that time, the investment thesis for Microsoft was focused on Microsoft's recent shift from paying outright for Office or Windows to more of an annual subscription base. Plus, they had recently come out with their Surface products, and I was a huge fan of them at that time. I thought that was a perfect fit for their business model. But either way, let's pause right here. Now, this is after the first quarter of Microsoft's 2019 number. Now, Microsoft has their year end at the end on June 30th of every year. So the first quarter is actually the end of September of 2018. Now, this is important because this is what the chart looks like from the day we bought the stock till Christmas Eve of 2018. And as you may remember, December was a pretty rough month for the US markets back in 2018. Well, how do we feel about Microsoft stock now? We bought the stock down here at $51 a share. It climbed as high as $115, and since then, it's down almost 20%. I'd hate to see this thing keep falling. Do we take profits, or do we want to stick in this thing for the long run? Picture the emotion that we're feeling as we're watching all of our profits roll away. Well, this is where I think it's important for us to remember that this is the wrong thing for us to be looking at. This can trigger very interesting emotions when we're investing. Instead, let's go back to our handy dandy spreadsheet. Now, this one is what we want to focus on. Now, if we look at this, revenue in 2016 missed by about $400 million, and the margins missed by about 2%. Don't forget, we want to compare margins to our margin projections. That's where I get that 2% from. Then in 2017, the miss was even bigger. And when we jump over to 2018, well, things started shifting in our favor. Revenue actually beat expectations, our expectations, by $6.5 billion. And margins saw a small uptick, although they're not at our 26% price target, margin target just yet. Now, in 2019, we saw that momentum continue. When we look at each of the quarters relative to each other, well, things look pretty good. Now, this is true for each quarter. So to me, this is a sign of a solid business. And it's actually why I like to lay out the spreadsheet like this. I want all the quarters to be horizontal so we can compare them to each other. Because if you compare quarter to quarter, Q1 from year to year, pretty good growth. Q2, good growth. Q3, Q4, same thing. But if we were to look at them horizontally like this, well, we might not realize that the dip in Q3 is a natural dip from year to year. It could look a bit more volatile when we go straight down from Q1 down to Q4. Now, this brings us to today, and ultimately the real question is, when do we sell a stock? Well, as buy and hold investors, I think it's key for us not to be trying to gear up to sell a stock too quickly. I believe that the most appropriate time to sell any stock for a buy and hold investor is when we find out that the reason we bought the stock is no longer in play and our outlook changes in a meaningful way. Often we can see that in the numbers. Perhaps it's margins, perhaps it's quarterly revenue growth year over year, or annual revenue growth year over year. Perhaps the reason in this example, I believed that Microsoft's switch to the subscription model would generate more revenue, as management was saying it was. Let's pretend that's not materializing. Perhaps getting out is a solid move, but it is a move based on the fundamentals of the company. Our exiting the position will be based on the fundamentals of the company and not what the stock price is doing. Now, another good reason to potentially sell a stock is that if we have a better investment opportunity somewhere else. So I've heard a few people say that you don't really lose until you actually sell the stock. And I saw this a lot around General Electric over the past few years as we saw the stock price tumbling. And while yes, this is true from a tax perspective, there's also something to be said for opportunity cost. See, had we sold out of GE back in this area, well, even if we took a loss, if we're putting that money into an investment with a better opportunity that we believe has better long-term prospects, that could also be a great move. Now, with the example of GE pretend that the reason we got involved with General Electric was because we believed that General Electric's biopharma business was going to be the thing that drove them forward. And then they go ahead and they sell their biopharma business. I recognize I didn't do that till later, but let's just imagine. If they had gone and sold that, and that was the reason we got involved, no matter what the stock price has done, we should reconsider that investment. Now, perhaps they replace that with a better opportunity, and that might be a good reason to stay. But in my mind, that is what we're looking for, a shift in our investment thesis, or the fact that the numbers aren't materializing as we expected. So the real answer for when to sell a stock is we only want to sell that stock if our long-term outlook for the company changes for the worse. So watching revenues or profit margins or free cash flow or dividends per share are a good way to gauge whether or not our plan is working. Now, I also like to generally read management's press releases after earnings calls or their management discussion and analysis from either their quarterly filings or annual filings. I think usually there they do a pretty good job of discussing the plan. But only if this stuff changes in a material way is it worth getting out of a stock. If we're in it for the high dividends and the company suddenly cuts the dividend even by a minimal amount, well, that might be worth reconsidering if this investment is going to be good over the long run. But if we stick with a table like this, and this becomes our compass to guide all future investment decisions around this particular investment, well, we can also update this table whenever we want, and we can put in new numbers, we can extend them out further for future years. If we let this information guide us, then the day-to-day noise of the stock price can often be washed out by the overall trend of the business. So in the case of Microsoft, well, when are we going to sell the stock? The answer is really not now. It depends on what happens in the future. On December 24th of 2018, when we saw the stock crash or stock pull back pretty big, I was perfectly happy just sitting there. It didn't bother me at all because you and I know the overall trend of the business. We know it's going very well. Don't worry about what the stock is doing. And I'm happy to sit here for the next 20 years holding Microsoft if their business continues to perform. So my question to you is, do you agree with this? Is there anything that you would have added to this whole process that makes the whole thing a bit stronger? Please let me know in the comments below. And if you haven't done so yet, hit the subscribe button. It doesn't cost you anything, and it really helps our channel a lot if you subscribe and come back and watch future videos. So, thank you for sticking with me all the way to the end of the video. I'll see you in the next video. I hope you enjoyed this. Thanks.